I'm Charles Payne, and this is Making Money. All right, so listen, the market has kind of gone back after that big day yesterday to sort of a wait-and-see mode. This, as the new clock starts to tick towards ratcheting up and maybe re-ratcheting up the fight against Iran, taking out different targets. Of course, the objective is that we move toward a resolution. Now, some market purists think that from a market's point of view, there's got to be a greater climactic flush, right? You may have heard this term before, capitulation. Now, this is just a chart that's been around for a long time. It's kind of fun. It takes you to where the market peaks, and then when it starts coming down, capitulation is part of that free fall. Then we get to a point of despair. I'm not so sure about this anymore. A lot of folks still believe by it. But here's the thing, and one of the reasons I think it's kind of hard, there's been a massive change, folks, in the fortune of this market. If you look beneath the hood, look at this, individual stocks. Back in January, over 70% of the S&P was trading, changing hands above their 50-day moving average. We came into the week at just 19%. That's a form of capitulation. Now, interestingly enough, while old school market watchers are waiting for capitulation, you've got major firms like UBS and Goldman. They remain as bullish as ever. Goldman, again, reiterating that they've got a $7,600 target, and they're looking for $309 in earnings this year. Jeff Hirsch, he put out a good chart that's the new seasonal pattern under President Trump's presidency. And essentially, we start off the year under a lot of pressure. Of course, last year, we all remember the tariff tantrum. And then we settle in, and then all of a sudden, bam, it's off to the races, right? So again, maybe a coiled spring that unleashes as spring unfolds. Of course, this takes us back, everything now takes us back to the Iran conflict and this new countdown clock. Now, not only are the Marines coming, but perhaps Gulf states, Saudi Arabia, UAE also may join in the fight as well. That was a good one. You got to tell me. Fitting, if not. Okay, let's bring in Bespoke Investment Group and Bespoke Market Intel co-founder Paul Hickey. That was Lawrence of Arabia, right? So fighting against the evils in the Midwest, in the Middle East, rather.
It's a never-ending story.
You put your own chart together, very similar. This is a one-year chart with this S&P. And again, these pivotal moments, right? President Trump, of course, went out and told everyone this might be a good time to buy. It was a great time to buy. No intentions of firing Powell. The market loved it. China going well, the market loved it. Don't worry about China. Every time he kind of makes these pronouncements, the market takes off and runs with it.
Yeah, so I mean, I think for the whole idea that there may be a Trump put in the market, this lends some credence to that. Because just when you think the market is going to start losing it, like Monday morning over the weekend, people were very nervous coming into the session. You get those comments coming out and lend some relief to the market. But what's important to remember is the level of the put could be way below where we are right now. But eventually, the long term, Trump is one of the most stock market focused presidents we've had. And so that's going to be his barometer.
Which is ironic because I hear people say that, but by the same token, he does things that will roil the market in the first place, right? I mean, if he really cared about it, he would never have done tariffs. He would never have done this. Like, I mean, if the market superseded his ultimate goal, he would never do them in the first place.
Well, you have to get some things in order to make the long-term picture better. So I think what you're seeing here is he makes these very, somewhat aggressive pronouncements, and then you think, okay, everyone talks about this taco trade, but he ends up getting more than he had to start with. So I think, I think in that respect, that taco is a little bit of a misnomer.
Yeah, I think so too, but it's fine, right? Okay, where are we in your mind with the investor emotions? Using this table, do you feel like we're at capitulation, fear? Where are we right now, and where do we have to go? I mean, is there a place for you?
Well, I mean, I think it depends on what your time frame is. And in the very short term, I think there's quite a level of fear in the market over what's going to go on. In the longer term, when I see this chart, it reminds me of our comparison between, ChatGPT when that was launched versus when Netscape was launched, and the overlay of the NASDAQ. Right. And the NASDAQ chart almost looks like that from 1994 to 2000, and then the ultimate bottom. And for ChatGPT, the NASDAQ performance has mirrored that as well. And we're probably, we're past the institutional investor phase into the public phase, probably about midway through. I'd say the first sell-off bear trap, that would have coincided in that time frame with the tariff tantrum last year.
Okay, so we're still in the upslope part of this.
Based on that comparison,
you
tend to see you have a couple more years of this.
All right, let's talk about the S&P then for a moment. You put out, listen, you guys put out amazing tables and charts. I use them all the time, let you know.
Yep, it's all right.
Here's what's interesting to me. S&P sectors, 10-day advanced decline lines. the script, typically in this environment, you go to staples, you go to healthcare, you kind of, those areas, not necessarily doing as well normally as they would. Is there some sort of new messaging going on?
I think it gets back to what your point is on the intro when you looked at the percentage of stocks above their 50-day moving average. What you've seen in the early stages of this Iran excursion is a very much of a throwing the baby out with the bathwater. And so we saw breadth really weaken in those first few weeks of the market. Just investors reining in risk. And what you saw is that whole broadening trade was sort of, extinguished pretty quick as the hostilities broke out.
Let's bring up the NASDAQ here for a moment. Again, I'm using one of the tables charts that you guys had. All right, so NASDAQ performance, 9 down weeks in the prior 10. That's what we came in. That's the streak.
Yeah, this is what we were looking at coming into the weekend here.
It hasn't been pretty. For the week that following, for the following week, it's been inconsistent.
Well, so the first column here where it's all red is the distance from a 52-week high at the time.
What caught my mind, though, is this is a far smaller move than the other prior times.
Yeah, so when you look at the returns 1 year out, they're actually pretty positive. But again, this is we're only 10% down. Most other periods we were down an average of 30%, which is really interesting part about this market is because we've seen very extreme oversold levels, but we're still so close to new highs. And typically you see these extremes deep into a drawdown. So it's, we've seen this sideways pattern which has really lowered the level of volatility and the thresholds needed to reach extreme oversold levels.
So I've got a minute to go. I just want to go over, let's just talk about two of these. Palantir we talk about, I think, a lot. It's always in the show. Planet I took profits on yesterday only because I had it on my trading service. If it wasn't, I would have held on to it. That was an amazing earnings report, but this is a new name for, I think, even maybe you. I know for a lot of investors, this is a brand new name.
Yeah, so this is a name that we just highlighted in our recent Triple Plays report, and a Triple Play is a company that reports better than expected earnings, revenues, and raises guidance. And when you have companies that have a track record of doing that, they tend to be, good long-term opportunities. Planet Labs just went from cash flow positive after years of burning through cash. They have a strong cash flow. And for people who aren't aware of them, it's a pretty amazing company. They can provide governments or businesses with a daily snapshot of anywhere in the world. And so you can look at, gas leaks, you can look at deforestation trends, you can look at all sorts of opportunities, you can look at people migration. So it's a really interesting company, and revenues are growing really fast with the company.
Just 10 seconds. Let's squeeze in Generac because historically it does well in these periods of adverse weather. Now it's being looked at maybe as an energy play with the demand for extra energy in this country.
Yeah, so exactly. It's usually a weather play. So people talk about this usually at hurricane season. But in their last earnings report, they missed revenues, but they actually talked about how they're expanding into data center power. And that's a big avenue for growth for the company, and should add a 1-2 punch for the stock rather than just.
I hope so. I'm in it, and I'm getting waxed pretty good right now. Paul,
it's done really well this year. It's up 50%.
Yeah, thanks a lot, Paul.
All right.
I appreciate it. All right, folks. My next guest says.